You're listening to the Mile Marker Podcast, where we explore trends and innovations in fleet automation and shared mobility, helping fleet-based businesses make better informed decisions and achieve full digital transformation. Welcome, everyone, to another episode of the Mile Marker Podcast. My name is Angela Simoes, and today our guest is Jeff Paul, the leader of the automotive captive finance sector and managing director at Deloitte Services. In this role, Jeff is responsible for Deloitte's diverse functional delivery of products and services in the captive space. He brings more than 35 years of experience in the financial services industry and has been in Deloitte's financial services practice for more than 15 years. Welcome, Jeff.
Thank you, Angela.
And joining us from Wrightsell is EVP of Strategic Alliances, Mark Thomas. Welcome, Mark.
Thank you.
So, Jeff, for those listeners who may not be familiar with captive finance or OEM captives and what that means, can you give us a short overview of who they are and how they work with automotive OEMs?
Sure. So the captive finance organizations are financial services organizations that are owned by the industrial companies. So if you think about car manufacturers, as an example, they have what they call captive arms. Their role is to finance and lease vehicles for those OEMs. They interact with the dealers as well. So they not only lend, loan, and leases at the consumer level. So if you go to buy a truck, you finance through one of these organizations, but they also have a commercial business where they conduct floor planning for the dealers as well. So they fund the inventory, they fund mortgages for dealerships and remodels, things of that nature. So their job is to be a facilitator to help these organizations move more vehicles in an economic fashion.
Okay, so in my mind, as a consumer, I'm thinking of it as I go to buy a car, and then when I say yes, I'm going to buy, and they send me to the office to do all the paperwork. Is that the captive office, if you will, right? So they're the ones.
Well, so the dealers in the case of captive finance for automobiles, let's use that example again. The lending that is done through the captives is what we call indirect lending. So you're actually financing through the dealership itself, and then that paper is purchased by the captive, and they are the ones that actually hold the loan or lease after that. Versus what we would call direct lending, large banks, for example, where you can go to a dealership and you would finance directly with the banking institution. So captives are not necessarily assigned every single loan or lease. The dealerships are independent businesses. They have the ability to push the loan or lease in a direction that makes the most sense for the consumer and for the dealership as well. But typically, the majority of the leases, at least, are run through the OEM captive providers. Got
it. Now, your team has published some reports that talk about how the role of the OEM captives is really starting to change pretty significantly. Can you talk about that and what's driving that change?
Yes. So let me start with a bit of a brief background. So in 2018, we released a study called The Future of Captives. And what we were doing was looking at the captive space on a global basis to try to predict and project what the business would look like by 2030. It was a very well-received document, and it really served its purpose. What we found, however, is that our predictions were accurate. They were directionally correct. The issue was that the market was accelerating faster than we had projected. So last year, we created a follow-on white paper called The Future of Automotive Mobility. This study was primarily focused on Europe, the Europe 5, we call it, the 5 largest markets in Europe and the US. And we looked at what the captive business and mobility business would look like by 2035. And so we saw changes in the marketplace just from 2018 when we did the original piece. So yes, we did predict that leasing would continue to accelerate, that subscriptions would be a large portion of the business, and also we would see growth in fleet. There are some factors that have changed the marketplace, I would say, that are helping to accelerate or drive the industry. For example, electric vehicles. That has a big play in the future of automotive mobility. We are also seeing the captives take on a more active role in providing services, things like insurance, things like payments, EV charging, um, products and services that will enable the consumer as the modes of transportation change, and like we call future of mobility, um, as the new title on what this industry is going to look like.
Yeah, and so these scenarios you're describing sound very consumer oriented. Somebody
Yes.
comes and buys a car from a dealership, they lease it, so then the captives are involved in there. How has their involvement in the B2B value chain changed and grown over time?
Yes. So, Mark, we've seen an uptick on the B2B side as well, and particularly in fleet. We are seeing the best way to sum it up is if you think about vehicles that come off lease. Traditionally, those vehicles, the dealers had the opportunity to purchase those vehicles when they were traded in or they came off lease. If they opted not to purchase those vehicles, then the vehicle was offered to a larger dealer network of that brand. If they opted not to take it, then the vehicle ended up in auction. And at that point, that vehicle was pretty much gone for good with that captive. The thought is how can these organizations take these vehicles, repurpose them, refurbish them, if you would, and put them back out into services such as subscription and fleet, and turn those vehicles multiple times instead of just financing or leasing a vehicle once. You might be able to finance or lease a vehicle 3-4 times. It keeps the vehicle out of the auctions, and it changes the dynamics from a captive perspective. So you are now getting into the asset financing business on those subsequent turns. So it's a mechanism that can drive brand loyalty, for consumers that might want to drive a luxury vehicle. They might not be able to afford a new one, but they can certainly obtain one that has come off lease or has been traded in. It's an opportunity for, in the B2B world, for some of these service vehicles that can go hundreds of thousands of miles, to be reused, repurposed, for multiple turns. So we're seeing an uptick in both sides more.
So does this mean that the OEM captives are inching into becoming competitors with large FMCs, the fleet management companies?
I would say yes, they are. Obviously, some of the larger fleet management companies represent all sorts of vehicles that they might offer to business customers. Some of the brands in the U.S., for example, don't necessarily have the full line of vehicles that those businesses might want or need. But I would say it's a safe bet to say that they are getting more into that space, and I think they'll become bigger players in that space.
So in one of the reports that you authored, you talked about how 50% to 60% of future profits may be at stake if mobility providers continue their business as usual. That sounds like that's, can you unpack that a bit for us? You mentioned and alluded to that when you started talking about these changing business models, but love a little bit more elaboration on how that came to be.
Yeah, there's a couple factors, Mark, that weigh into it. If you take the traditional business model where you were financing or leasing a vehicle, like I said before, it's kind of one and done, if you would, then the vehicle moved on elsewhere in the ecosystem. In this case, you now have the ability to refinance or release that vehicle, like I said, multiple turns, but you also have to look at the consumer appetite out there. And we're seeing more and more usage-based opportunities, especially with the younger generation. They tell us in our research, we have a recently released paper, the Global Consumer Auto Survey, which we release every year. And if you look at the data there, there's a large portion of the Gen Z consumers that are interested in subscriptions and ultimately fleet. One of the reasons that they're interested in that is they want the latest and greatest technology. So what it means is instead of purchasing a vehicle and holding on to it for 8 years, they would rather pay in a subscription or fleet type model, and it allows them the opportunity to upgrade and have access to the most current technology.
But isn't that kind of fly in the face of how subscriptions have been modified to work? Because a subscription for a new car is typically cost prohibitive if you're putting it at such a short term, whereas the market for subscriptions that seems to be actually feasible because you can keep the monthly payments low even though they're all in, is subscriptions for a used car, one that comes back from lease, 6 month, or open-ended. Right.
You're absolutely right. And what I would say to that is there's two markets. There's the folks that will lease or finance new cars, and what we predict will be happening is there'll be more leases than financing. We see financing decreasing, right? But yes, there are the consumers that still want newer technology, and in a subscription-based model, they have the ability to get a newer vehicle than they would normally have, right? That's one aspect. The other thing that's important to them is it's bundled, so it includes all of your maintenance, all of your insurance, and that's important to them as well. So I don't disagree with you. I think you're exactly right, and it's a model that will accommodate the needs of the younger generation from a technology standpoint, and something that they have a keen appetite to. But I do agree with you.
So this is a major shift for OEM captives as far as they used to manage financial transactions, and now you're talking about having to manage vehicles and vehicle assets and turn vehicles, like you said, into second, third, maybe fourth leases. And so that requires new digital systems, kind of a new skill set, right? So how are the captives adjusting to that? And then, as Mark's question was, does that put them in direct competition with fleet management companies? If so, fleet management companies kind of have a head start because they've been doing this for a long time, right? So how do the OEM captives now catch up to be competitive or have competitive offers in this realm? Seems like there's a lot of catching up to do here.
There's catching up to do, but remember too, for example, let's take servicing as an example. They have dealer networks, and so this is an opportunity to drive more vehicles into the dealers. So they have a footprint, they have an ecosystem that they can leverage. Now they will have to undertake new offerings, new services, what have you, in the marketplace in order to accommodate this, and they recognize this as but it's a model that through the change they believe will yield better financial results for them. Did I answer your question, Angela?
Yeah, I think so. Maybe we could dig into a little bit what you're seeing in terms of are there OEM captives that have started down this path and are doing it well, and what are the changes they have made as far as investments in new technology or investments in new talent, that kind of thing. Because then I'm going to have to ask the AI question, right? Sure. And if AI is playing a role here to help them move into this new world.
Yeah, they have and continue to make investments, especially in the areas of technology with new platforms, consumer-focused platforms, both consumer and business platforms that will avail the customers to ease of use, if you would. They also are looking at leveraging the telematics coming off the vehicles. There's a lot of value that can be derived from that, and if you think about it, they also recognize that this technology is going to be very, very critical in building loyalty as well. If you're a captive today, you think about as your competition the banks, and that's a perfect example. So today, if I buy a Ford, I would not finance it through GM Financial because that you would go through Ford Motor Credit. But if I buy a Ford, there's an opportunity that I might get the loan or lease through a bank, right? And so a lot of the technology that we see in the financial services space, and quite candidly, the banks are very, very progressive when it comes to the technology. Some of that technology will be leveraged um, through the captives. Couple that with the telematic data that comes through the vehicles off the OEM's platforms, it becomes a very powerful tool, Angela, that you now know where the vehicle is going. You know the driving behavior. That gets into things like insurance. So an example would be, I have an accident. The vehicle knows I've had an accident. It directs you to a local dealer. There are things you can do with the insurance coverage now. You have all the data on the driver. You might waive deductibles, for example, or there's a whole litany of things that you can do. Now that also creates an opportunity to sell more OEM parts for the repairs through the dealer. So it all kind of feeds upon itself, and it's all derived through technology and technological advancement.
And how do regulations factor into this? I mean, they're going to, as business models change, I imagine there's going to be evolving regulations, especially with EVs and,
Right.
insurance requirements for EVs and that sort of thing. So talk about regulation for a little bit.
Yeah, the regulation is just now, I would say, let me back up. I think the Europeans are further along from a regulatory standpoint than we are in the US. I think the regulations are evolving. Right now, where we're seeing a lot of the regulatory pressure is coming in regard to the environmental issues. So we're seeing a big focus on everything ESG. We have the IRA Act here in the United States that provides incentives for purchasing EVs. I think we'll continue to see more and more of that, to be honest with you. So I think the regulation will be a big factor. And when we talk about telematic data and insurance data and things like that, I don't think it's out of the realm of possibility that we will be talking about privacy concerns before long also. So I think we'll continue to see more and more regulation, to be honest with you, and it'll be interesting where it all goes.
It's a great point about the sustainability factor, because if companies are able to increase the usage of the vehicle assets, which means they're able to get more use out of the vehicle and not having to purchase as many vehicles, and there's a lot of sustainability issues that go along with that. It's actually better for them, and it helps them achieve their ESG goals. Is that correct?
That is correct. And you also have to think about, what sort of powertrain is it, and what are the incentives, or are there incentives? I mean, so we have ICE and diesel, for example, right now that are primarily what we do. But you're seeing an increase in hybrid, for example. You've got EV. There's testing and some promise around hydrogen. So I think what we're going to have is, it's not an either or equation. I think we'll have a cross section of all of those. And with that, I think that we'll have a lot of different regulations, based upon the powertrain of the vehicles that we're seeing out there.
And you talked a little bit about how this new model seems like it's going to benefit dealers, right? Because if they're managing services and they're driving vehicles back to the dealers to take care of some of these services. But how does it also affect the relationship between the OEMs and the OEM captives? Is that dynamic changing at all?
There's been a debate for a number of years. Will we go to a direct sales model, similar to what Tesla does, for example? I think for the traditional brands, the dealer networks are well established. I don't think they're going anywhere. And I do think that there are challenges, for example, with the direct model. I mean, an example that I would cite was VinFast coming to the United States. Their initial plan was they were going to sell vehicles direct, and then they've since gone out and they're building a dealer network out. And I think part of the reason for that is it's not just the sale of the vehicle, it's the servicing of the vehicle, all of the things that go along with it. Those are the areas that dealers play in today. And I think there's value in that. And so I think we'll see the role of the dealer evolve as well, in services and things that they provide to the customer.
Very interesting. Did you have a comment, Mark?
Yeah, just understanding the life cycle or the multiple life cycle management that's changing the automotive industry. I know Deloitte kind of characterizes it in these four categories of sourcing, upfitting, in-life service, and remarketing.
Mhm.
Which of those categories are the OEM captives looking to kind of claim and establish more of their own beachhead? And how is this? How is it changing in that
I
regard?
think the jury is out on that. I think that there are, and different captives will play in different spaces. Some might play in the entire ecosystem. Others, for example, might opt for niche areas. So, one example that I would cite is an up and comer, a company called Autonomy here in the United States, which is a subscription service for EVs. They have carved out a particular niche where they want to play, and they see upside there. So I think what we'll see is we'll see captives in different areas of the ecosystem. I think we'll see a whole slew of new players in the space also that will step up to play in this space. So you mentioned remarketing, Mark. It's not out of the realm for companies to become significant players in the refurbishment space of these vehicles when they're traded in, or they're up for remarketing purposes. So there's opportunities like that. There's the whole business of battery disposal with EVs. I mean, as the technology changes, consumer preferences change, the way the vehicles used are changed. I think it's gonna manifest itself in many different ways. We're gonna see a whole group of new players.
So, given you mentioned a few of these new players, do you have any examples or citations for how some of the large established automakers have added innovation to their portfolio?
One area, and it's not unique to one specific captive, but insurance is an area where there's significant traction right now. Either they are building their own insurance capabilities or they're partnering with other insurance players, but they see that as a mechanism to create additional services to the consumer. And our research shows that consumers would prefer to purchase insurance at the point of sale if they could. So how do you bring the insurance products to the consumer at the point of sale in the dealer, for example? So those are the things they're looking into. Payments is another one. So you have things like EV charging. You could have shopping services. You have insurance. There's a whole number of things. The captives are looking at the payment space to say, how do we play in that? I mean, is there an opportunity to create a new service offering in and around that? EV charging is another example. So, should we be building out an EV infrastructure for these vehicles? Because that's one of the things we hear from consumers is kind of creates their apprehension for EVs is the infrastructure is not there. So do I have access to chargers? And is this an opportunity for the captives to get in that space and create new revenue opportunities? So it's kind of all over the board.
I'm relating as a EV driver to a lot of what you're saying because so when I purchased my Volkswagen ID4, it came with 3 years of free charging from Electrify America. And while I would really love to trade in the ID4, I don't want to lose my years of free charging. So, if there was a way, so the short-term lease or, trading in the car is a very attractive thing for me, though I am not a Gen Z or millennial. I'm a very proud Gen Xer. Thank you very much. But again, I don't want to lose that free charging. Also, we have a really good insurance rate through our credit union. So I'm relating a lot to what you're saying, whereas if the models could be changed and I wouldn't lose some of those things even if I did trade in my EV for another one, that would be very attractive. But then again, it's like how do you make the consumers aware of those kinds of things? So yeah, I'm personally just very excited to see how it's all going to play out, so that I can trade my car for a new
There
one.
you go. That's an idea for brand loyalty.
Exactly.
It's like if you stay with our brand, you'll get to keep these things grandfathered in.
And I'll go back to our study. I think what you just demonstrated is, we've gathered a lot of data. We have a lot of theories, if you would, on where this is going to go. But there's a perfect example. These organizations are going to have to meet the customers where they want to be met and with the services that they need or want. And so things like that will spin out of these existing offerings, Angela, and provide opportunity.
Yeah. And, speaking of things that consumers want, maybe need, but it sounds like this case is going to be more of a want, I think. Car sharing, right? That's an area we haven't really talked about yet. But that we're seeing companies like Toyota with their Kinto brand and Stellantis with their Free to Move brand, and even Ford with their partnership with Uber, and Uber making another partnership with Otz, I think, is another company. We're starting to see that. So we talked about how the OEM captives could, become direct competitors with FMCs. They could also become direct competitors with rental companies. Are you seeing that as well?
They could, but they also have the opportunity in the remarketing portion that we spoke about to provide these vehicles into that capability, if you would, in some form or fashion. So again, I think that will evolve also. But you're spot on with your assessment that again, that's why we changed it from captive to mobility, because the question becomes, is it just automobiles, or is it scooters, or is it, public transit? I mean, how do you serve the consumer, and um, help them in their mobility, with different offerings that serve them well, and it creates an opportunity for you as a business. So I totally agree with you.
So here's another idea. When you mentioned scooters. So my husband drives to the train station, takes his e-scooter out, and gets on the train with the e-scooter, so that when he gets to the city he works in, he can scooter from the train station to work, right? But he had to buy the scooter. It's not a cheap scooter, right? So if there was a deal where you buy a car, get a scooter, like, that's a very attractive thing for commuters, I
It
think.
is.
So there, another idea.
No,
No
you're
royalties.
absolutely right. And
um,
similar to that, if you think about EV, it's not so you go to purchase your electric vehicle. Well, you also need a charger at home. So, how do I help the consumer finance or lease a charger and deal with the installation of that, so that it creates opportunity and access?
Absolutely. Again, we're dealing with that. Not only charging at home, but then how do you offset the energy consumption at home, right? If you don't have solar, do you now partner with a solar company so that you can have that conversation, right? I
Right.
mean, the areas where it can just kind of grow and partner is really kind of endless. It's really exciting. A lot to figure out, but it's really exciting. Um, well, this has been really very exciting conversation, frankly, because when new technology is introduced, or when new business models are introduced, everyone kind of takes the fear position and, like, oh, how are we gonna, jobs are going to go away, or that's going to ruin. But we're talking about a lot of new opportunity that can be created here, which is very exciting, right?
Yes.
New revenue streams, new types of jobs, I mean, it's just all really, really cool. Your initial projections, or your initial report, talked about what things will look like in 2035, but it's looking like it's not going to take that long. So what are your new projections? What are you seeing in the next, like, 3 years, 2, 3 years?
It's interesting. It ebbs and flows. So what I would tell you is, um, I don't know when we will have to dust this off and update it again, to be honest with you, because like I said before, it is moving so quickly. But there's also a lot of dynamics at play here. So for example, when we did the study, EVs seemed to be on a tear. Well, that's seemed to take a pause as of late, right? And that's because of a number of factors. So like I said, it's going to ebb and flow. We contemplated hybrids as an example. Well, that hybrids seem to be growing in popularity right now. So again, I think on a macro level, I think directionally we're correct. We'll stay the course for the foreseeable future, but I think we will be in a position that we're going to have to go back out and update it again. It's just because the technology is moving so quickly. You're dealing with things like autonomous vehicles. You mentioned AI before. AI, where does that play in all of this space, especially within the vehicle, right? What happens to consumer sentiment and consumer demand, right? I mean, on the not only the new but the remarketed vehicles. So it's a moving target.
Absolutely. And thank you for reminding me about the question that I actually never did ask, which was the AI question. Are you seeing OEM captives looking into how AI can help them evolve and adopt or adapt to these new opportunities?
Yeah, especially in the servicing of their customers. I mean, they have been using forms of AI for a number of years. It's just that the technology is changing so rapidly and it's more accessible. I think you'll continue to see more use of AI in the customer focused areas of the captives. I think that will make them more proactive and more nimble, and better able to serve the consumers, quite frankly, to meet their demands, right? Because they'll have access to the data, like the telematics data. They can then do things with that data that they've never been able to do before. So it's an exciting time. It really is.
Right. Well, and then there's the new telematics data that's going to exist as ChatGPT goes in cabin, and you're able to, talk to your car as if they were your personal assistant, right? And that creates a whole other stream of data that can feed new services and reports and things like that.
Exactly.
Excellent. Well, this has been fascinating. We reserve the right to have you back on when you update the report so we can find out all the new things that have been happening and where things are going. So we will definitely be having you back on, Jeff.
That'd be great. Look forward to it.
Well, we have started wrapping up our episodes with lightning rounds just to end it on a fun note. What do you think about that?
Let's do it.
Let's do it. All right. So what was your dream car as a kid?
My dream car was a 1973 Porsche 911 Targa.
Nice. I don't even know what that looks like, but I'm going to go look it up. I see Mark knows what it looks like.
I know that's the one that has the oil filler flap on the outside that people frequently will put gasoline in and ruin their engines. So you might want to think about a 72.
I have to say, there's been a theme here when we ask the dream car as a kid question of I guess because it's as a kid, but like the old, like original muscle sports cars, like the real sexy ones. Like I love it. That's been a great little trend to see. All right, something a little more modern. Will we ever be a fully electric society?
I don't believe so. I believe that we'll hit a inflection point at some point, and like I said earlier, I think it's going to be a combination of hybrid, diesel, ICE, electric, hydrogen, all across the board. Obviously, the technology is changing, and that will be a driver in this, but I don't think we'll be fully electric.
I would have to agree. Have you ever ridden in an autonomous car?
I have.
You have?
It's interesting.
I haven't. I'm a little. I know Mark has, but what was your experience, Jeff, doing that?
I think the experience was good. It was the fear of uncertainty, I guess.
Yeah.
Before I was in the vehicle, it's like, do I trust this technology? So, but yes.
Yeah. Very cool. Whiskey, vodka, or gin?
Vodka.
Anyway, well, thank you so much, Jeff.
Thank
This
you.
has been a really fun conversation. We appreciate the insights. It's an exciting time, and we look forward to having you on the show again.
Thanks
very much.
Have a great day.
You too.
Bye.
Thanks for listening to the Mile Marker Podcast. If you liked what you heard today, give us a like, share this episode on social media, and even take a minute to give us a review on iTunes or wherever you listen to your podcasts. Be sure to subscribe to our channel so you can join us for future episodes full of insights and ideas to keep the mobility industry moving forward.